Hello, how do you do your swing trading daily chart analysis of upward large cap stocks if you are using long up to long swing trading strategy? It's good to have your watch list of stocks that you like to swing trade, and here for today, March 12, 2025, we are going to analyze 3 stocks from our list. The first one we are going to analyze is IRM, and we purchase IRM. You use either maximum daily chart or 1 year daily chart, but I prefer maximum daily chart. That way I can see all our support lines or uptrend lines that we trace. The one we color in purple are the one we like to use to enter the trade. IRM is less than $100 a share. As a new swing trader, you can just buy 1 share at a time of a stocks that you like to swing trade, and or you can allocate just $100 per share, $100 per trade to start out, and just slowly practice the strategy you are using. IRM, yesterday the price went up. That's why the closing price was highlighted in green. So, and yes, the market closed for March 11, 2025, and we are analyzing how those stocks perform during the day. So you do your analysis after the market closed or early in the morning before the market open again to see how the stocks on your watch list perform during the day. And green bar on the chart here just means the price at the closing of the market was higher than the price in the morning at the opening of the market. And a red bar just means the price in the evening at the closing of the market was lower than the price in the morning at the opening of the market. The price dropped that day, the price went up this day, yesterday. So if we zoom back, so IRM is going down. We purchased it at this trend line, but this trend line turned out to be maybe the upside wall of the mountain, and it reached the peak there, and now it's going down. Maybe if it goes down, we have this that it touched base with multiple times in the past, and since it's closer to this, I kept this highlighted, but I think I'm going to highlight this one as well, just in case you prefer to just stay on this one, rest on it, and start going up from there, so we can keep an eye on it. But yeah, we will probably buy some more if we pull back here and start going up from there. But in the meantime, by buying it here, we have, and it's negative in our account since the price is now lower than what we pay for it. And for the swing trading strategy we are using for the long up to long swing trading strategy, you see the stocks, the price is going down. We have this trend line to buy at, and when it reach the trend line and start going up, we have this high. You'll notice that when it's coming down, it's creating lower lows. This low delimited by the green, this low is lower than this one, is lower than this one, which is somewhere lower than this one, which is lower than this one, which is lower than this one. So we have a downtrend here. So when you pull back from reaching that high, when you pull back to reach the trend line, it rests on it, and start going up from there, and we start having higher lows. This high is higher than this low is higher than this one. We'll compare the bottom of those red bars, and this low is higher than this one, and this one pretty much after this one, which is two higher lows, we plan to buy at the first or the second green bar that follow the pullback. So the day we bought it, it probably was green that day, but by the end of the day it turned red. So we purchased it that day. It went up a little bit and then pulled back and has gone down. So that is the strategy we use. You choose your stock to be on your watch list. You trace your support lines, which are uptrend lines, long uptrend lines, because they cross more than 1 year time frame, and you pick the one that you see the stock pull back to multiple times over the years to be where you want to buy it. If you feel like it's going to come back to those lines, and you just keep extending it as you go, and every day you observe the price, you do your chart analysis to see where the price is to where you want to buy. And when you reach that line, you start looking for higher lows, just like the way we noticed it there. And when you have about 2 or so higher lows, is an indication that maybe it's going down. You can buy at the first or second green bar that follow a pullback. But like in this instance, you could try all of that, but still it could pull back on you. So it's good to see the trend line you are buying it at. So with how it behaves this here tells us that this line could be the supporting wall on the way up to the mountain, the upside wall of the mountain. So now it's working on the descent side of the mountain, and when it reached the valley and decided to go up, we might buy some more again, so that we have we have a good amount in it. And once you buy the stocks and start going up, you do your daily chart analysis. You compare where the price is, where you bought it, where the price is to where you want to sell it. And for upward large cap, they frequently reach new high, so we can target the next new high to exit. But it will depend on where you buy at. If you bought it somewhere there, your best chance will be to sell it somewhere there. So, but if you buy at the valley, you must well wait. Like we bought it here, for instance, we will wait to sell it at the new high. So when you buy at the valley on its way up, you'll accumulate a lot of profits if you are waiting to sell it at the new high. But when you are buying and when you are selling, it's good to compare how the price moved in the past around those entry point and exit point. So at the entry point, you can compare where we enter. You can compare it to see how it behaves there. So when you reach it, it went up, pull back to it, went up, pull back to it before it started going up. So by coming back to it, it went up, pull back to it, went up, and pull even below it before going up. So it's good when you are ready to buy, by comparing what happened around that trend line in the past, could guide you knowing if it's okay to get in or if it's going to change direction few times around the trend line before taking off, for you to decide if it's okay for you to get in early or if it's okay to wait for a change of direction, not just pulling back, going the same direction, but change direction a few times before you get in. So just to have more confirmation that it's not going to continue going down. but again, the choice is yours. And when you are exiting, you'll compare the previous high to see how it behaved there. If it pull back a little bit and create a new high, pull back, create a new high, pull back, and so forth, few times before actually pull back. When it reach the first new high, after leaving the valley, maybe you might decide to stay in the trade longer because it will create multiple highs after few pullbacks before be ready to start going down again. So maybe the first new high may not be where you want to exit, but wait for a few more, not necessarily to maximize all the profits, but to lock in some profits. We are not trying to be the best swing trader. We are just trying to make money here. So, and as you can see, pick stocks for your watch list that you can invest in long term, and you swing trade it. By investing in long term, you will be accumulating money. You will be growing your money at the trend line. But by swing trading it, you will be locking in those swings. You see these swings away from the trend line, you will be locking those swings in it. Keep in mind that you will be buying it next at a higher price than if you have stayed in it from the previous time that you purchased it. But the swings that you lock in, that profit will largely offset the increase in price that you will pay, since the support line you are buying it at is uptrending. Therefore, you'll be paying a higher price each time you are buying it at that trend line. So, a sign that the stocks is going up. But yes, cash flowing in long-term investment stock on a regular basis, it is my way of swing trading, and that's what I share on our platform. Just take your time to handpick stocks for your watch list that you could have invested in long term, and just swing trade them to cash flow their swing away from the trend line. The next one we are going to analyze is IT. And when you buy it too early, well, you just leave it in your account. You don't need to set at a loss. You just leave it there for the stocks to do whatever it's going to do and come back up for you to make profit in it. So, because you know the stock is not going anywhere. IT. So IT, yesterday the price went down. We like to buy at this trend line, and the price is going to this trend line, but it's not quite there yet. So we'll just keep observing it. We only have one trend line for it, and you can see we purchased it there and we got stuck in it. We purchased in November, we sold it in February. So that's how long we kept a negative in our account, because we bought it and shortly after it pulled back to this trend line and went up and reached a new high there, and we sold it. And guess what? It pulled back after that and has been on the descent ever since, creating lower lows. So the next time we would like to get in, we would like to be at that trend line. In 2024, we traded using short uptrend and swing trading strategy, and we traded around this trend line and buying it. That's why the arrow is there, and the arrows at the top showing when we sold, bought it and sold, bought it and sold, and bought it and got stuck in it and sold it there. But yeah, and the last one that we analyze in this session is J. So we put J in blue because we are targeting it, because it's close to one of our trend line, and we like to keep an eye on it. But it seems to be leaving that trend line, going below it, and you can see how wide it is away from the trend line. Well, if you invest in long term, you'll be growing around this trend line or around this one. But by swing trading, you'll be cash flowing those fluctuations away from the trend line and surely buying it at a higher price, but still cash flowing those fluctuation away from the trend line. So yesterday the price went down. It crossed this trend line and is going lower it. So we are just going to keep observing it. Here we have a consolidation because this low is at the same level as this one, but yeah, we don't know if it's done going down or not, but we are just going to keep observing it. But this conclude how you can do your daily chart analysis every day after the market open of the stocks on your watch list to see if you'll find something that is well positioned for you to buy when the markets open, during the day when you do your trade. But again, we didn't find anything among the trade that we analyzed today that we'll buy today. Thank you so much for your time. If you are looking for ideas on how to create your own watch list, we have videos related to how you can create your own watch list to swing trade stocks. And will you please check the videos, the playlist in the description of this video. It will be at I will show you the title of that shortly as well. We thank you very much for watching our videos. We thank you very much for your time. We thank you very much for all your comments. And we thank you very much all that subscribe to our channel. It's good to have a good amount of stocks on your watch list that you can analyze within an hour or so every day. And you can analyze them very quickly. And if you find one that is close to the trend line where you want to buy, that's where you want to spend more time to pay more attention to what is going on there. And it's okay to buy just one share at the beginning of a stock that you're interested in with this long up to long swing trading strategy. If you buy it at the valley and set it at a new high, if you are trading upward large cap stocks, you'll accumulate some profit in it, even if that's $200 per trade or $100 per trade. $100 is enough to meet the brokerage firm minimum requirement to open a brokerage account or to open a Roth IRA if you have a job. $100 per trade, you can even give it a try. For J, for instance, is 122.17. If we check IRM, for instance, it was less than $100. But if you buy at this trend line, which is 74, and you sell it at the next high at 130, for instance, 54, so 130 and 70, let's just say 77, 130 and 77, you see is maybe $23 profit per share. You'll stay in the trade for a while accumulating that much profit. So $22 per share, it is profit per share, it is a lot of profits. So you can target 5% return or 10% return depending on where you are buying, where you want to exit, or the new high to exit. But just start small, practice with real money, start small, and using large cap stocks. They don't fluctuate much. You are not going to make a lot of money quickly in them, and you are not going to lose a lot of money quickly in them either. They are stable, giving you time to practice the strategy rather than trying to keep up with their fluctuation. And once you master them, you can try to create a watch list of other market capitalization type of stock as well. And when you have your watch list, you flag the one that didn't really work alongside your strategy during the year, and at the end of the year you can take them out, go back to your master list of stocks, go to swing trade and pull some others to your watch list and give it a try. And over time you'll have a watch list well curated and well designed to match the strategy you are swing trading with as well. And you just swing trade from your watch list. And just keep in mind, view your watch list as a part-time job and allocate about 2 hours a day to do your chart analysis, do your swing trading transaction bookkeeping, and do the swing trade itself. I'll be back. And we have the watch list for the playlist for our watch list videos and some other playlists there as well. But though, if you have any questions that we could have answered in any one of those videos, will you please check the related playlist for it. Not all of them are published yet though, but those are the recorded one and are getting published. And we have series on watch list, how you can create your own watch list, and we are almost done publishing those. And we have another series that we start recording, and we publishing them as well, just to go through the whole filtering process when you come across a stock, how to analyze the stocks to see whether it is good to add it to your watch list or not. But yeah, thank you so much for your time. Again, if we have full-time job, is good. We learn different ways to make money outside of our job, whether by having a side business or having knowing how to invest long-term in the stock market and knowing how to swing trade. Investing long-term just means you are making a lot of money at your job and you are putting in the stock market and to let it grow there slowly for you. You have to sell it to cash in, to cash flow it, to use that money. And swing trading is more active and you are cash flowing along the way. Those stocks that you choose to invest in. So, but yeah, so that over time you work and the money you earn from your paycheck, you swing trade with it. You run you swing trade with it, and the profit from your swing trade, you use that to to provide for your household, to pay you back, to support your lifestyle. Does that make sense? It will take a while to reach that goal, but start small, and as you make a little profit, you'll get that confidence to keep saving from your paycheck, to invest and swing trade with, and so forth. But it's very important we start thinking about different ways to make money outside of our full-time job, so that we do not 100% rely on our employer for our main source, as our main source of means, like our main source of providing for our basic need. Thank you. And I think that's a lot of pressure to put on an employer as well, making them sole provider for you. Yes, you are trading your time and they committed to pay you for your time, but it's a good idea for us as full-time employees to know that it's not the only way we will make money. As soon as those jobs we are not the owner of the business, we can let go at any point, or we might like the job but might work with some coworkers that we do not get along with, making the whole environment not pleasant every day you go to work. Therefore, knowing that you do not rely on that job to provide for your family is I think it's a good feeling to have, to make a not focusing on what is bad about your job, but focusing more on what is good about your job, and just maybe focusing more on what is good about your job might help you go through the day and not dislike your job much. Thank you. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Thank you.